Stuart, it's great to have you on.
Thanks for having me, Hope. Great to be here.
So let's just start with a really basic question to ground our conversation today, which is, what is the role of the housing market in the U.S. economy?
Real estate is generally undercovered, and there's reasons why it should be more covered and is more important to everybody. If you look at housing, it's the biggest purchase a person makes in their life is to purchase a home. A home is the American dream. If you look macro, real estate is as big as the stock market and the bond market. So just in terms of total market cap, it's just enormous. And the interesting thing about real estate, it's generally undercovered compared to the stock market and the bond market. Reason for that, real estate is just more opaque in general. There's a lot of hidden ownership. It's very local. There's national reports that come out about real estate, but really real estate is location, location, location. So you always have to kind of look at the hyper-local parts of real estate to really get a sense. And it's a tough sector to understand because of the locality factor. You know, it's a little bit less easy to understand than the stock and the bond market, for example.
And I think for most people, they think just about residential, and there is commercial, industrial. How does one side of the real estate market drive the other side?
Yeah, I mean, that's a good point, good question. The two main areas of real estate that we cover here at The Real Deal are residential real estate and commercial real estate. Development is a topic that spans both, since, you know, you're building in residential, building in commercial. But it's a tricky interplay. I'm sitting here today in Hudson Yards, where our office is. And that's a really good example of how the interplay between residential and commercial real estate happened. So this was the biggest private development in New York City ever. And, you know, they had to put office buildings there and put residential condos as well, put retail. And there's a little bit of a chicken and egg factor there. I'd say generally offices came first here, and then residential, you know, came on top of that. You know, you have people working there, you need a place to live nearby. Residential hasn't completely caught on here. So, you know, that's kind of a case in point. A lot of times the office space is the driver, and then the retail follows and residential follows as people, you know, want to live near their offices.
Now, is that, and you know, you talked at the beginning about location, location, location. Is that the general chicken and egg sequence of factors impacting most markets in the U.S., or are there specific geographic regions where maybe it's the opposite?
Yeah, I mean, to kind of zoom out from that, really the biggest factor that cuts across everything in real estate is unaffordability. You're seeing growth in Texas and Florida. Why are you seeing that? Because of affordability issues. It's cheaper to build down there. It's cheaper to live down there. Then you have red state and blue state divide. Generally, in the blue states, New York and California, really supply constrained markets, really expensive, not building a lot of new stuff compared to what's needed. And then you have Florida's and the Texases and the Sun Belt of the world. They're building more, they're more affordable, and people are flocking down there. To give you a personal example, I grew up in the New York area. I had 25 relatives here 10 years ago who lived here. Now I have 5. So the rest of them basically relocated to Florida, South Carolina, North Carolina. It's a real sea change in how it drives American demographics, how it drives politics. You know, and it's really interesting to see, you know, how housing is so central to some of the biggest political and economic things that really, you know, define our country.
I mean, if you really pull the timeline back to where human development sprung up, it was near natural resources where you can survive.
Right.
And now it feels like it's policies driving affordability that then drives people or workers, and then drives sort of economies from that flow. Is that an accurate way to sort of look at the trend line?
Absolutely. The policies and the politics are so key to this. And Texas is a very no red tape, let's build, you know, kind of mentality there, which is great. Florida has some of the same mentality, very pro-business. And then you're seeing, you know, in the New Yorks and the Californias of the world, there was a real sentiment over the last couple of years that they didn't want to build. You know, a lot of the far left kind of city council members in a lot of these places, New York, LA, Chicago, San Francisco, they thought that if you build, causes gentrification and it displaces people. There's been a real sea change, talking about the affordability issue in some of these northern cities, that, hey, we need to build more now. And, it's back to like supply and demand basics. We need to be building more in California. We need to be building more in New York. Interestingly enough, I think the galvanizing force there, for a long time, the AOCs of the world were not very pro-building. Then it kind of shifted actually in the presidential race, weirdly enough. Kamala Harris put out a call to build 1 million homes in the U.S. And suddenly, there's a lot of probably factors interplaying with that, but suddenly it was kind of like the left-leaning politicians were like, okay, abundance agenda. And now you're seeing in New York, there's a City of Yes plan. In California, the state's saying, hey, we got to build more. And there was just a recent thing, not to get too into the weeds, but where the state of California said, we appreciate environmental concerns, but we can't let them get in the way of building more housing. So there's a real understanding now that, in some of the coastal states that you got to build more, something that Texas and Florida have already always known. And you want to get that balance, between climate, and concerns and all that stuff. But, there's a real affordability issue in the country. And, people I think are really actually trying to address that in a way that's more proactive than I've seen in, the last 10 or 20 years, which is good news.
Before we move off of this, I want to go back to gentrification and how the left has sort of flipped on this. Was there a particular moment, and I mean, yes, the most recent one being the election, but even before that, where the concept of gentrification being bad turned?
Yeah, it's hard to know exactly when that was, but like I mentioned, there was something around the time of the presidential election where you really saw a lot more of that. Like I mentioned AOC, and she wrote an op-ed for the Times saying there needed to be more housing when Kamala Harris was running for president. She wanted it to be state-controlled, state-generated housing. She wanted the government to build the housing, which, is arguably relatively impractical. But, still the sentiment was there. So we're starting to see that really like a little bit rubber meets the road in these places where there's going to be more building. So it's complicated. It's not easy to just go ahead and build these there. The economics have to be there too. But I think it's a positive sign, basically. I think for the country is in a pro-building kind of mindset now, which I think is necessary. And I think you hear buzzwords like abundance. And I think it's an interesting time where there's abundance, even though that's kind of not super well defined in the Democratic lexicon. And you could argue that the Democrats aren't well defined, period. But there is the abundance agenda on the left and with the Democrats, and then Republicans are generally pro-business. So that kind of together is making for a pro-building environment, which I think is good for the country.
But I guess I was also trying to kind of connect it to your own experience of leading the Real Deal for over 20 years now, that maybe if you can think back to just how much friction the fight against gentrification really played up against developers, and curious if you can think back to some of the many, many stories I'm sure that you've written where they lost that battle because of community protests. And when that happened, what were some of the more effective tactics that were deployed by the communities to stop the developments from happening?
Yeah, there was one key inflection point in New York City that happened, which was really seen as terrible by the business community, positive by community activists. This is when Amazon, if you remember, when they were looking for their HQ too, and they did this whole survey and looking around the country, where can we set up a second headquarters? So they agreed to locate their second headquarters in Long Island City, which is just outside Manhattan and Queens. Good location. And basically the community came together and kind of far left politicians and said, hey, we don't want Amazon here. And Amazon, they accepted the bid. They were going to actually come in, but then they changed their mind. And it was really shocking that New York didn't seem like a pro-business place at that moment. And the business community was really upset. I would be curious to go back and see, would the community and the politicians have done the same thing today? I'm not so sure they would. I think there would be a little bit more of a sentiment of, okay, we'll have Amazon in here, make sure it build enough affordable housing. It's going to produce jobs. Great. But, that was an interesting inflection point for New York City specifically. Yeah,
I mean, especially if you look at the recent studies showing just how stagnant the New York City labor market has been, very specifically. I want to get to some of the most undercovered themes or underreported aspects of the industry. You have a couple of investigative series that you're working on. There's also this battle over private home listings.
Sure. And I just want to back up a second and give sort of like, a state of the residential market and how that ties in. So because this is emerging and undercovered. So it's interesting. The residential market, the ability to buy and sell a home, generally been there's been a malaise in the market for the last year or two. Had lower interest rates, 3%, that territory, and then went up to 6-7%. And it really slowed things down in the market, and there just wasn't a lot of activity. But prices were still high. What we're seeing now is it's becoming more of a buyer's market. Buyers have leverage in buying a home. We think that prices will come down eventually. It seems like that. You never have a crystal ball. But, it's probably going to be a tougher time to sell a home in general. So there's this thing that's happening in the industry, and this is undercovered. Generally, basically, there are things called MLSs, which, you basically have all the property listings in a given location. Any buyer seller can go in. Oh, I'll log into the MLS. Okay. I can see everything that's for sale. And it's good. You want transparency in a market. You want to be able to, if you have a property to sell, you want to show it to the most amount of people, right? Because if you show it to the most amount of people, you're going to get the most amount of eyeballs and the most amount of competition and the highest price. So what's happening, and this is generally undercovered, is the trade groups in real estate have become weak. There was $1 billion settlement against one of the trade groups last year, and a lot of the brokerages are coming in now, the big ones. Compass is one of them. And they're saying, we no longer want to share all our listings and pool them in one place so everybody can see them and we can have a transparent marketplace. All the brokerages now, or some of them, want to keep the listings for themselves so that a home buyer would have to go, okay, I'll check this brokerage and I'll check this brokerage and I'll check this brokerage. And it's probably bad for consumers, but the brokerages want to do this because if they can both have a listing and also bring the buyer in, they'll make more money at the end of the day. Basically, there's a splintering of the residential real estate industry that's going on to some degree. That's probably arguably not going to be good for consumers. The brokerages themselves would tell you there's some reason why it's okay for the consumers and we'll pay more attention to the properties we have. But you have to think that transparency is a good thing for any market, right? So that is an undercovered thing that I don't think most people out there are aware of.
And what about some of the other investigations that are currently underway?
One thing we've really been focused on, and it impacts consumers as well as real estate professionals, is real estate brokers are the most populous piece of real estate, residential real estate brokers, the National Association of Realtors. It has 1 million+ members. And what we've found is generally the industry is pretty underregulated. It's regulated at a state level and it's regulated from the trade associations. But we've done stories where, we've looked at, for example, in Florida, we looked at a period of a couple years where there were 9,000 complaints against real estate brokers, and it turned out a couple hundred lost their licenses. So a minute piece of all the people that were looked into and had complaints. And at the state level for licensing real estate brokers, there's just not enough being done. We found instances where there was a real estate broker who lost a court case, and I can't remember exactly what the charge was, but you look at the state database and there was no record of the fact that the agent had any disciplinary action at all. That's really concerning because you're somebody who's making the biggest purchase of your life, your home typically. You're using a real estate agent. You want to know full disclosure what this agent's history was. I think most brokers are good, but for the brokers behaving badly, that small subset, it's concerning, and it's something that we've been writing about just because there should be more awareness and more transparency about the history of people that you're entrusting, a lot of money to, basically.
Why isn't there more regulation?
It's really a good question. Finance really got more attention. Post 9/11, there was a lot of the Know Your Client disclosure and the Patriot Act. And there was a lot of fiduciary duty that stockbrokers and investment advisors really had to do. It never translated to real estate specifically in the same way. You could say maybe it's the strength of the real estate lobby, but it's not totally clear why the real estate brokers aren't subject to the same disclosure. That said, back in the aughts, back in the teens, there was a lot of foreign money coming in that was basically, they'd say New York City was a Swiss bank account for foreign money and parking their money in condos and having hidden ownership. The feds have really tightened up on that, where you can't quite do the same amount of just bring your money out of Kurdistan and plop it into New York City condo. You can't do that in the same way that you could before. So there is a little bit more oversight of real estate than there was in the past in that specifically. But in terms of just the real estate professionals themselves, there hasn't been a ton of reform there. It's good for the industry and for the way we come at it, since we cover the real estate industry. It's also good for the 95% of brokers who are ethical and who are good to deal with that 5% or whatever it is, 2%. It's hard to say. But if you're operating an industry and you're upstanding, to have to deal with that person who's not upstanding is such a time waster. It's such a bummer, and it's bad for business in general.
I am curious about some other factors that may or may not be playing a role in residential real estate trends. Let's start with the rise of short-term rentals. I don't know about you. I get tons of short-form videos in my feed claiming that I can save tons on my taxes and all these and benefit from tax loopholes if I have XYZ number of short-term rentals. Have you seen that drive any trends in real estate around the country?
It's generally not big enough on a macro scale, short-term rentals, to compete and to affect the broader home buying and selling market. It's not quite enough units to impact where prices go. So, I think limited in terms of just like how it impacts overall prices. But, certainly it's a factor in some markets, in more tourism-driven markets, it's a factor. But I think, I feel like the Airbnb craze was, a few years in our rear view window a little bit. But still, it's more baked in now than it was when it was, brand new for people.
Well, related to this, which is just overall content creation around homes, there was a big boom in home decorating, remodeling during the pandemic. Were there any lasting effects of this sort of content creation boom around housing and home decorating that you see still playing out and maybe continue to play out?
Yeah, well, this was an interesting one. So if you look at real estate agents who we cover, the ones who are doing best these days are the ones that have social media presences. There's like the Ryan Serhants of the world, $1 Million Listing New York, Fred Eklund, Eleanor Sarugo. They parlay their TV spots into actually doing business. So, and they, a lot of those guys are at the top of the heap. Really prompted, not every real estate agent, but a lot of them are so synonymous with social media these days. And social media is just such a part of doing business as a real estate broker. To your point, it kind of like just saturates the whole space. Funnily enough, some of that social media presence and reality TV image of real estate has kind of backfired for the industry. There was a settlement last year, which impacts every buyer and seller of real estate, where, not to get too into the weeds with it, but basically, if you're selling a home, you have to have a separate agreement with a buyer's agent if you're going around. There was some way it was done where if you're selling a home previously, it would spell out what the commission was for the broker's agent. Now that has to be done separately. Anyway, it was a lawsuit that came out of the Midwest. And there was some kind of grumbling about it that home buyers and sellers were watching these reality TV shows on Netflix, and they were seeing agents in LA drive around in Maseratis and pulling up to their clients' houses. And kind of like the public was like, wait, should these real estate agents be driving around in Ferraris? And maybe I'm paying too much commission if they're lime green Lamborghinis that they're driving around town, and they're just like, maybe we're paying too much. So there was some kind of thought, and it was never pinned down, that this class action lawsuit against brokers was kind of a result of real estate brokers becoming too social media savvy, too reality TV friendly, and the public kind of revolted against that a little bit. So it's an interesting interplay between social media and reality TV and real estate and home buying and selling, that there's a lot of intersections there. I mean, there's an intersection with everything in social media, of course, but that's the real estate version of it.
I'm doing a deep dive series on the impact that the content creator economy has had on all the industries. So this is why I'm still on the topic with you. Other ways I feel some of the content that's been distributed through social platforms has an impact, and I want you to check me on this and tell me what else you've seen, is misinformation, just pure misinformation about what real estate trends are, where they are, or again, even kind of the normal buying and selling. In your experience, maybe in your reporting, what have been some of the most egregious pieces of misinformation that you've seen circulate widely on social media?
Yeah, I think the biggest, and we have done some investigative stuff on this, so kind of get rich quick schemes on social media. There's something called syndication, where if you're buying a portfolio of rental buildings, you can say, come along and invest with me. We're going to syndicate. We're going to pool the money together and buy rental buildings in the Sun Belt or wherever. So there was a real flurry, and it's diminished somewhat because the market turned, of syndicators basically going out and saying, you can get rich quick. You're an engineer, you're a dentist, you're a doctor, pool your money together. We'll go buy these properties in the Sun Belt. We're going to make a killing. And it was just like, it really had a get rich quick kind of mentality. And then, so that was in the low interest rate environment. And then interest rates shot up and a lot of those went belly up and were in really bad shape. So that is a good example of like get rich quick social media misinformation. I think the other thing about social media that impacts real estate, like we said, if you're a residential real estate agent, you almost creating social media is part of your job now. Mm-hmm. If you're an office space owner or you're like this building owner, if you're on the commercial side of real estate, those guys are more staid and they don't really do that. But I think one area where social media really matters these days is politics. And in shaping policy, the reason arguably why Mamdani won the Democratic primary was he had a great social media presence and he's doing these posts about jumping into the ocean. And he's freezing because it's the winter and that alludes to the rent freeze he wants to do in New York. It's eyeball friendly stuff. And if you look at the business groups that are out there, this is for real estate, it might extend beyond that, the trade organizations and all the groups that want to fight for pro-business agendas. They're so behind the times in their social media presence, they should hire an 18-year-old and have them just like figure out what to post, because the chambers of commerce of the world and the real estate versions of those are just, they don't know how to communicate. And it's to the detriment, because if you're trying to have a balance between left-leaning politics in shaping a city and more centrist views, the left is way better at social media than the centrists and the business groups, which you could argue are more centrist.
But the right are better at podcasts.
That is true. That is true. That is so true.
I've made this argument to other industry leaders, I won't name them, but that there's a perception problem. And now everything starts with the narrative and the perception, because that's how people are interfacing with the world. So I love that you are bringing up that point. Outside of social media being a big driving force of how things are changing too. Actually, no, one last question on this. And this might be a little bit too retail, if you will. Yeah. But just even designing trends. I mean, I can't tell you how many black hardware, white countertop trends like I've seen. I feel like social media has also flattened a lot of the aesthetics of designing and what developers are doing. Do you think that there is an interplay, an intersection there between content creation, social media, and what developers are even willing to do as they're building their, McMansions still?
Yeah, well, I'll tell you an example that doesn't come from real estate, but is apropos. I was in England earlier this summer. I was in Greece. I was in LA. I was in New York. And my kids, who are 12 and 15, noticed that every teenage boy has the exact same haircut. It's like, see, comb your hair forward. It's a really strange haircut. But it's like, basically, they were like, because everybody's seeing the same things on social media, it creates this trend that you see across everything, even in different countries now. So you talked initially about there being no, central narrative, but in some ways with social media, in the social media days, but in some ways it's created more of a central narrative even beyond country borders. So I think the same thing's happening to an extent with design. I mean, if you're talking about new construction and new builds, there's only so much you can do. There's a cookie cutter aspect to it. I mean, there is a flattening there.
Yeah. Do you speak to developers about this? I mean, there's a risk now. If you don't stick with that script, right, that you won't be able to sell. And so now you have the flattening. In my head, I think it's a flattening of aesthetics across the board, whether it's style, like to the boy's haircut example, or to kitchens. Do you speak to developers, like I said, about this trend, if they care or not, or they don't care because they just want to make a return?
I think they want to make a return. I mean, I think when you have that amount of money at stake and you're making, these developers who put up, $500 million buildings, billion-dollar buildings. I mean, it is a huge financial gamble and you are on the hook. So they want to be notable and create a niche. But on the other hand, they want to play it safe and not get out over their skis because they're making these huge, gambles. But I think there is a flattening aesthetic. I mean, I mentioned I'm in Hudson Yards right now. The big knock against Hudson Yards, even though I think a lot of the office space has done well here. But, the knock is that it's, you go in the mall here and it's like, I could be in Dubai or I could be in Singapore. I don't know. I'm in, Am I in Midtown Manhattan? I guess. So there is that aesthetic, luxury aesthetic that is worldwide. I think it's probably been the case for the past couple of years. But, to your point, it's like it is a flattening kind of, and it's a worldwide flattening in the way that pre-social media, it wasn't worldwide flattening, before. That didn't exist.
I mean, I imagine you see this even as you're choosing thumbnails and getting images, right, of buildings and interiors. Like maybe 20 years ago, you saw a difference based on locality and location. But now, like you said, you can swap all the pictures and they would all, it wouldn't really make a difference. Aesthetics aside, because I could talk about this whole aspect and
I would make one other point about that. Like if you look, it goes to the architect level too.
Yes.
Because you might have, SOM, Skidmore, Owings, Merrill, you might have one of the big star architects, Bjarke Engels is a big architect, and he'll do a project in New York, he'll do a project in LA, and he'll do a project in 5 other countries. And it's like, because developers have realized that, I mean, it's a good thing because there's more adventurous architecture than there was 20 years ago.
Oh, you think so? Even with the flattening of aesthetics?
I think so. I do think so. Architecture is way more creative than it was 20 or 30 years ago. Developers at some point realized I want to take chances because people appreciate it. I think so. But to your point, it's become so pervasive now that you might see the same star architect. They're building in 10 cities, and then it's kind of like, okay, I get it.
Got it. Like star chefs that open franchises.
Yeah. We call those star architects, like star architects. Yeah.
I love that. Well, I'm going to look into these. Thank you for the trend tip there. I'm definitely going to look into that. On a more serious note, I think a lot about how geopolitics and the changing nature of relationships between countries is changing everything. And another series that I'm working on is looking at how that is impacting every aspect of our economy. How are geopolitics impacting U.S. real estate markets in the commercial sense and in the residential sense?
Yeah, well, certainly the Trump agenda has some positive things for real estate and some negative things for real estate. I think the positive things, the big, beautiful bill, there's provisions there that are pretty pro-real estate. I think some of the stuff that's been concerning to the real estate industry has been tariffs, one. So, you talk about foreign relations and all that stuff. Developers have had to contend with, construction prices rising because of tariffs, goods for building new projects. So that's a big consideration. I mean, I would say developers were really concerned about that. I think the ones I've talked to more recently, they either source enough from the U.S. and it's mixed in with the tariffed materials from the tariffed countries that it isn't driving up their costs way too much. It doesn't seem like some catastrophic thing, at least, and maybe it's just the fact that it hasn't emerged yet or that it hasn't really hit their pocketbook quite yet. But from the preliminary, it seems like it's not going to stall out building, having higher construction costs because of tariffs, but that's kind of preliminary. I mean, the other interesting thing is foreign buyers coming to the U.S. and is the U.S. a safe haven, right? Like, it depends on what side of the political spectrum you're on. You could say, no, the U.S. is not a safe haven anymore. You could say the U.S. is a safe haven. It's always been. Interestingly enough, we're still seeing strength from foreign buyers the first 3 months of the Trump presidency. So I'm waiting for more data, but I mean, the preliminary thing was foreign investors numbers being up. So yeah, it did surprise me a little bit. There is the fact of the weakened dollar, and Trump's aiming for a weakened dollar, and maybe that's going to help fuel U.S., foreign purchases in the U.S. So that's kind of a little TBD on that.
Was there a part of the world where in the data that we have so far, where you can see that this is the biggest source of foreign investment into the U.S. real estate market?
Yeah, on the West Coast, the Asian money was strong, and it's usually pretty strong in California. In Florida, I think the Canadian dollars were still coming in to a degree, and Florida relies a lot on Latin American money as well. I think the New York numbers were down a bit. So it's all still TBD, but the extent that people still see the U.S. as flight to safety, that's a huge thing. And, you look at like the Miami market in particular. If there's political instability in Latin America, which, let's face it, there often is, that money goes directly to Miami and buys a condo and gets that money out of whatever, politically unstable situation there is. So, I don't see that changing, relatively speaking. It's a safe haven.
And when we say safe haven in this context, we're talking about safe haven for investments, for money to sit for a while.
Yeah.
And I bring up, safe haven also the segue to some of the domestic political unrest with ICE raids happening in some of the hottest real estate markets in the country. I know you're watching this really closely. How might these raids actually impact real estate patterns and trends?
Yeah, we've done some reporting on this. We even were looking into ICE agents asking landlords about tenant information. So we had some reporting out of Dallas that, there were advisories from trade groups to how to deal with that. Haven't quite seen the same thing in other cities, but a lot of times landlords don't want to talk about it. In terms of ICE raids, construction sites is a big impact on real estate, how and when that affects construction projects, how much of the workforce at a particular construction site is undocumented immigrant labor. So there's been concerns about that for sure. I wouldn't say it's been widespread, but sometimes it's hard to tell because the developers don't necessarily want to talk about it. But I think the extent that it's ramping up, it's going to be a bigger concern for developers as we go forward. So obviously, really keeping an eye on that.
Well, journalist to journalist, because that was another one of my questions for you as you were talking. I mean, in terms of sources, I feel like I don't want to make any broad generalizations, but given how opaque some of the real estate market can be, I'm curious how open you have found real estate sources generally to be as you do your reporting inside your newsroom.
Yeah, that's a good question. It's like you don't know, what was the old Donald Rumsfeld statement? You don't know what you don't know.
Yeah.
So I think there's certain things that are being shielded for sure, like I was mentioning, ICE raids, that sort of thing. But I feel like off the record, people are pretty transparent about that. On the record, less so. I mean, I think there's frankly, more fear of, speaking out against federal policies. There's, some concern about that. And I think business leaders have been more careful about that in general. But I think overall, we've been hearing, pretty directly what's been happening.
Yeah, I guess that was really the really specific question, which is, have you had more sources request to go off the record than in past years that you've experienced?
Yeah. Not really. No, I think people are still, I guess speaking out, direct criticism of, the administration, I think maybe that is a little bit more muted. Yeah, I'd say so. But, in terms of like off the record conversations about that and all that and how it's impacting business, I feel like that's, been pretty steady. Getting into the data with the jobs report and going to, a less frequent basis, that's not good for transparency or the real estate industry. Real estate bases a lot of decisions around the jobs report at a macro level, at least. So I think that's reliable data is so important to real estate, and it's hard to get in the first place. Like I was talking about at the beginning, real estate is location, location, location. You have to knit together so many different hyperlocal markets to get a picture of what's happening in the markets. Any bit of data that supports getting an overall picture, is helpful.
I know we're talking today mostly about residential. I think I definitely want to spend maybe a separate episode just talking about commercial real estate trends, because I was speaking to one developer, where actually I think he was an investor. And I just brought up real estate here's not doing so well, commercial. And he's like, well, it depends on what part of commercial. Maybe office space is right where we're hurting. But, in his part of the world where he was investing in, where he actually still is, looking at warehouses, warehouses, especially for him, it has been huge. So maybe we'll spend another separate episode on this, but just really quickly, can you touch on a couple of themes that you're seeing?
Sure.
Be pretty persistent in the commercial real estate sector.
The biggest story of commercial real estate has been, looking over a period of years, has been COVID, and that decimated downtowns in the biggest cities when everybody was working remotely. So you had a lot of office buildings that were really suffering. It became more nuanced than that over time. Basically, what happened was the new buildings in a given city, New York or LA or wherever, did well. There's been a real flight to quality, as they call it. The hedge funds of the world are willing to shell out money for space. The finance industry has generally been pretty in office. So that's so-called Class A space. The really kind of crappy offices, Class C space, that's been the stuff that, has been really suffering. A lot of owners of that office space have fallen into distress. There's been a movement to take some of those office buildings and convert them to residential. There's such a housing affordability issue, such a need for housing. Not every building is cut out for that. It's kind of logistically complicated, but they've been able to a decent degree, convert obsolete office buildings to residential more than some people thought. It's not a silver bullet to fix cities, but there's a decent amount of it happening. So that was really the biggest story, of the last couple of years in real estate. And basically what's happening now is I'd say, like, in general, US office market is slowly beginning to heal. People are more reliably in the office now, even if it's 3 days a week. And if you need, if you have people in the office 3 days a week, well, you need the office space. You can't just rent it for 3 days a week, right? I mean, so you're still filling that space. So New York's been doing, been kind of ramping up. So that's kind of the story with office space. And then you look at things like the industrial market. Yep. That was like red hot during COVID when you had the Amazon building out last mile distribution centers left and right across the country. It slowed somewhat. It's still a pretty strong sector, but that overheatedness of the COVID era has kind of waned a little bit. Retail's been slowly rebounding, and it's kind of in a stronger spot than it was. And then the hotel market is kind of mixed depending on location.
And just really quickly on the last part about warehousing, you're seeing a lot of AI spurring data center builds. Is that showing up in your reporting at all?
Yeah, data center builds. Yeah, that's a huge area. The funny thing about that from a real estate point of view, it's even a new type of real estate because it's not dependent on square feet. It's dependent on, gigawatts of energy, and, it's dependent on voltage statistics and access to energy. So it's funny that, like, the valuation of those things, it's a new type of real estate that doesn't even follow the traditional paths of what you would consider real estate. So it's been interesting to watch that too.
As we end our conversation, I want to ask you two forward-looking questions. One, which is just a broad one. If you are somebody who is very curious about where real estate is headed in the US, residential, commercial, industrial, what are some of the most pressing emerging themes that will be driving each sector here?
I think we'll see if industrial gets back to the pandemic era, its status. I think downtown's office space is going to continue to recover. I don't see that changing. There's just more stability in work schedules now. Retail will still be strong. If you look really far forward, The Real Deal does an event, a retreat event every year called Future City. Some of the interesting thing there is 3D printing of housing. You're going to see more of that happening. It's already happening in Texas, in Austin, where a lot of this headquarters of this building tech is happening. You're going to see more modular housing, but modular housing that looks good. And you had the big fires out in LA, right?
Yeah.
So part of the discussion about rebuilding there is, do we build modular and can it look nice? And when you're dealing with any climate disaster, which we didn't really talk about that, but that's a big concern. How do you rebuild after climate? We'll really zoom out.
Yep.
Even have 3D printing companies, one's called Icon, that are being retained by NASA to plan for how you would build on the moon. So talk about Elon Musk, super forward looking and how it intersects with housing. 3D printing and modular housing to me are two things that are really the future. You can imagine a future where you have 3D printed houses and modular housing, and you can move those houses because of climate change, and maybe you'll hop in your driverless car and it'll take you the 5 hours to get to your house, and you're just, sleeping. And there's a whole, real estate is brick and mortar, real estate is location, location, location. But I think there's pieces of that are moving away from location, location, location when you talk about being able to build houses anywhere. Some of the technology that's coming could really turn real estate on its head in the future, but that's a little bit of ways away.
No, you're right. We should have talked about climate change, but I think we should probably spend also a separate time just on that, especially as, insurance companies are pulling away. When you were talking about the modular homes, I was thinking about this one scene in Ready Player One, the film, which I don't know if you recall.
Oh, right. Yeah.
I mean, talk about flattening of aesthetics. Right. Are we going to be living in these sardine can structures?
Yeah.
That looked just so apocalyptic,
Yeah, that was pretty subpar modular housing. It looked like everything was going to tip over there.
Yeah. All right, I know you got to go, but one last question. It seems like being that this is a very undercovered industry, and given that journalism is in the state that we all know that it's in, so journalist to journalist, do you think that if a journalist starting today wanted to look into a beat, that real estate should be one that they should look into because maybe you're still growing?
Yeah, well, The Real Deal, we're the biggest publication covering real estate in the country. Like I mentioned, earlier, real estate as a sector and, in terms of just total value of the, economics there, it's as big as a stock and bond market, but it's generally undercovered. So it's a great area to dive into for investigative journalism. And, it's a ripe area to really do, local in-depth reporting too. We're excited about it. And yeah, I do think it's a great place to start a career. And, if you're looking for a job, let me know.
Yeah, I'm giving you a plug. Also, your tenure, I think, speaks to how sustainable this beat really is and how undercovered it is. So it was awesome to get to talk to you today. We have way more things that we should talk about in the next
Sounds great.
a couple of months, I think. So, but we'll leave it here today. Stuart, thanks so much, and I'll see you next time.
Hope. Thanks, Hope.
All right, take care.
Bye-bye.
Bye.